All right, market update 3-5. We're going to do interest rates, stock market, and some Bitcoin today. As I made the video last week about this line up here and we broke, and I drew that X in there saying, hey, listen, if we break through this line solid, this is where we'll be. So we are actually at our lowest level since the beginning of December. Now, interest rates didn't fall back down as low as they usually do. That's just kind of how it is. They go up, they don't fall down as much because basically, with someone over here might have got a 7% interest rate, or 7.25 could have been, by instantly having them 2 months later drop down to, say the fives again, or high fives or low sixes. This loan becomes a default risk for like an early call risk for a mortgage, right? If you got a 7.25 and now it's at 6.25, hey, I'm going to refi, even though it's only 2 months into your loan. And usually there's like a 6-month prepayment type of thing. So the banks end up losing if you do it within 6 months. So that's why they don't let them go down as fast as they go up, of course. But we're at the best point we've been. We broke through. So we're now in a neutral downtrend. When we break through lines like this, we're going to have extremes where we bounce back up. So that's why yesterday, everyone I had was locked. We locked at the lowest possible point. That's it. We're safe. We're done. Next few weeks, we'll probably see, if it doesn't just complete collapse, we'll see a bounce up to probably somewhere over here, which will put us into the high sixes again and then kind of head back down. So interest rate standpoint, looking good. You zoom out overall, you see this big old pattern we're in. Realistically, we've been in this since, the end of 23. We're not going anywhere. It's just kind of bouncing up and down. And expect this to just continue to make lower highs and lower lows. But as soon as you do, we're going to have snapbacks. So that leads you over to the regular market. S&P is in its own little thing. If you watch my financial freedom video, I went through about how the market's going to be choppy right now. There's just a lot of indecision. And what exactly happens? We make a brand new high. Hey, everything's great. Turn around, snap, and make a brand new low. Same thing here. Same thing here. Basically, it's the same pattern over and over again. And what's happening is it's widening up. So it becomes this like broadening top where I don't know what's going to happen here. We broke a new high. Everyone's excited. And there's no volume behind it, and it turns around, sells back off. And now everyone's panicking, hey, the market's going to collapse. And then it usually holds. Here would be a hold point, and then bounce back up. That's where I kind of see us doing. We have a little bit more room to the downside. This big 200-day moving average is important, but previous times that we hit it, we seem to, just break through quickly and snap back up, unless it's a bigger downturn where you're looking something like 22, where we went down for a while. But I can't say where we are just yet. You could just see there's a lot of indecision in the market. Jumping over to Bitcoin, same sort of thing. Bitcoin's kind of leading the market because it trades 24 hours, trades on the weekend. So a lot of times you can get insight into the market before it opens based on Bitcoin. So Bitcoin hit that line, bounce back up. Unless we get a break over 90, 95, it's kind of the same thing. I don't see this really cranking up too high. Definitely not going to be hitting the 106 anytime soon. This is what happens. You had 2 chances at it, and the market rejected it. So unless we get a really decisive run up, if we turn around and break through the 80,000 mark, we're going to be looking somewhere in the 60, and then we're talking a big base, which could be, months before anything like real starts to show up, which is going to be this up and down choppy, right? This was March of 24. We really didn't do anything until November, December, where it started to break through. So if we don't make it above the 90 mark, that's what you're going to probably expect on the Bitcoin stuff. But for the housing market, interest rates turning down are always good. Straight collapse hurts just because you're going to have a lot of refi risk for some of the newer loans. Doesn't hurt us, hurts the banks. Who really cares? And then, refi opportunities start to open up for some of the 7% loans, like the ones from last year, 2 years ago, will open up right around in this zone here. So depends on what we do here. We bounced a little bit. We turned, could probably expect to see another test up here, but realistically, we got a nice pattern brewing. This helps for lowering interest rates. Hurts a little bit more for house shopping because as the interest rates get lower, everyone gets back out there and got shopping. So like I had told everybody in the golden opportunities, these high runs were really good chances to get in because you're going to have the chance to refi. You got the actual house and you own it, because that's sometimes the hardest battle when nothing's selling. But lower rates will spark some people to then sell their house. This will put more inventory back on the market because people will feel more comfortable. Hey, I'm not going from a 3 to a 7. I'm going from a 3 to a 5.5 or something like that. So that was a long one. Have a good one, guys.